Hi folks, Nick Shaheen here recapping the week ending 7/31. I let some time pass before I do some of the grading just this way. I go back to it and read it as if I've read it for the first time almost. Can't remember that far back. Anyway, so this is week ending 7/31. Can't remember exactly how the week ended or anything. Looks like on a high note. Okay, so let's start with the SPX. By the way, we're reviewing how well we did on, just as you know, every week before the week starts, we forecast the week's ranges. And then after the week passes, we'd like to see how well we did with that forecast and see if our ranges have held up or not. This is, so far we've had nothing but A pluses, and let's see on the report card this time. All right, so this is the SPX action for that week. 2100, these notes are all cut and paste from the notes from Friday actually, and then reiterated on Monday before the open for the whole week, and then we update them daily throughout for members. SPX 2100 magnet, and so upside pressure from that standpoint because we opened lower. In resistance, if we bounce back to them, resistance after that starting at 2125. Much stronger resistance at 40 plus. Bulls failed to break last week. Small magnet also at 2075, so we might see some downside pressure there. Decent support band between 60 and 25. When I say that, that means that each leg is pretty much support on its own, so we should find support as we fall if we fall. Another band of support at 2000 or lower. Luckily, we didn't need it. Indeed, upside support, upside pressure, like I said, right here, worked out, hit 2100 right there. That was my magnet. Tried to go through it, failed at 10, maybe 12, 13, 15 eyeball here. So worked out perfectly on the SPX. How about if it worked out here, then it must have worked out here. This is a SPY. 208, 211 and a half magnetic area, meaning we will tend to play between 208, 211 and a half. That was my expectation, and look at that. We played in between. I don't even need to read the rest of it. I guess we will. Losing 206 could technically bring much lower prices. We didn't. Well, now that we're far beyond, we just did today in a big way, so this is fast forward to today, but this is a different set of data. This was for that week only. A plus over here. How about the Qs? Magnet at 109.5 and 110. 109.5 and 110. So there was a magnet right here. Small supports at 108 and 7. We didn't need them. Thank goodness for that. But nothing else. So bears have the upper hand this week because there was not a lot of support visible for change. Upward pressure from 111.5, 114 area. So we had some pressure, upward pressure, to bring prices above 111.5 and possibly into 114. But there's 113 to 115 resistance, so I thought that there'd be resistance starting here, and indeed we stuck close to that, and we didn't go too far. So range is held. Apple 25, 26 neutral area. So neither push or pull. Anything 125 or higher is resistance. There was no real support. Small support in 23.20, but nothing significant. So I thought that it could have some support between these two and a little bit lower. So basically, markets were free to fail, but they didn't, not until now. RUT, so I call it also a decent call there. RUT, support at 1220. Indeed, we had support because we opened that day and then built upon it. 1190, but the bears have some room to run if they can continue to press. But they didn't. The bears are, you know, they were very lazy. All right, so no major thing. I had no visible resistance except in the high 12s, and we weren't going to go there. All right, how about the IWM? 123, 119. So 119 to 123. Each decent line of support. So we tried to fall, we didn't. We tried to fall real hard that day, rejected a real low, and then built upon it. but then we didn't go too far. 124.26 upward pressure wasn't big enough though, all the way to 127. But it could be bearish. Like if somebody's selling calls against some positions that they have, they're probably expecting a downfall. So it could be bearish. No visible lines of resistance, so it was free to go up there. So in this case, I would not have sold credit call spreads on this one. All right, so what about, whoops, going the wrong way. What is this guy? Google. This is Goog L, not Goog. 675 or higher is resistance. That held. Credit call spread should work based on this OI data. That's all I need to read. I did a call on Goog, but I didn't bring the data here. But if this worked out for Goog L, it must have worked out for Goog. All right, so once again, I give us an A+. Teacher, very, very happy. If you're not a member, join us. You know where to reach me. Nick, signing out.